there's looking at the deals, but there's context for what the investor's up to as well. Hey, this investor is moving out of a very high equity, low cap rate California property, different mindset, different goals, different phase of life, different markets moving into and then we talk about the unique partnership that Jenny had with some, one's a younger, newer, hungry investor. And it's all about like the different types of deals they can find, but a lot of it's based on, hey, what can we see? But also like, I like having the context on there as well.
For sure.
Because straight numbers tell half the story.
Right.
There's always a lot more happening behind the scenes than what's just on the spreadsheet. Right?
Yeah. And so that's always one thing I want people keep in mind is like, just don't look at numbers, but also get the story, get the context behind it. Hey, why is this person buying? Why is this person selling? Why does it make sense for him or her? And then understand, learn from that and apply it to your situation.
Yep, absolutely.
Yeah, don't stop at the headline. Keep going.
Yes.
Look at the fine print sometimes.
Yeah. Hey, Colorado. This podcast is the monthly market update going over stats, trends, and deals for the month of July. I got the Vision Advisors crew in here from Southern Colorado to Denver to Northern Colorado. We have 5 or 6 deals we're going to talk about, from room-by-room house hacks in Denver, wash park rental properties, to scrape and build fourplexes in Springs, to duplex up north. So lots of fun deals to talk about, and deals are still happening in this market. Some creative partnerships, some creative deal making. So lots of fun stuff to talk about. So I'll introduce everyone as we kind of go around, since we got the studio full today. But good morning, everyone.
Yeah, it's a full house. Glad to be here, Chris.
I know. I love it when you make it in the
awesome.
studio. Jenny, we're always gonna start with you. You're down south. We're gonna work our way up north. So we got Jenny Bayless, who lives in Colorado Springs, invests in Springs and Pueblo, and her and Leah, they just know the market, do a bunch of deals. So what's going on down south, Jenny?
Yeah, so I'll just jump into the stats because it's very quick, kind of same as usual. We are down in median price about 2.5% from last month, which I thought was kind of a big jump month to month, I thought, but overall, year over year, is only down 2%. So not a huge difference on that.
I feel like the Springs and Pueblo have definitely been on a little bit more of a roller coaster than what we've seen in the metro area for sure, from month to month, right?
I don't know if it's a numbers game too, because we just have a lot less inventory
volume,
period. Yeah. So I don't know. And then for new listings, the most interesting thing I found about that was that we're at the lowest amount of new listings for a July in the last 5 years.
Wow.
So
the lowest amount of new listings coming on the month of July for the last 5 years.
Yeah.
Wow.
Yeah. So even pre-COVID, I thought that was kind of interesting. So I think it's, what everyone's been hearing probably, like no one wants to sell, that sort of thing. So, but then jumping into the more kind of, recent deals and everything that we've been working on is we have two clients, they partnered up within the Envision ecosystem. So
this is cool.
That was pretty neat.
That's pretty sweet.
Yeah, so they are partnering up on a room by room rental with the intent of adding a lot of bedrooms to the property. Like, it's set up really well to add bedrooms, bathroom, and do just a regular room by room rental, because as we've been noticing probably over the past year, nothing in Colorado Springs cash flows without a creative strategy to it. So house hacking room by room. This is a traditional rental room by room. They're getting a DSCR loan on it. So they're doing everything very creatively in terms of the partnership, the value add, the loan type. Like, they're just really going outside the box. And I think that's how you make things work in this environment. So just kind of wanted to advertise, kind of their strategy. And like, if you're interested in kind of going outside the box, let us know, because we're always happy to talk options with people and just give them ideas, and they can fit what works best for them.
What are the rough numbers on
there?
there?
This market is you just got to be creative, right?
Yeah.
Like, everything has to be viewed through a little bit of a different set of eyeballs than what we've looked at it over the last couple of years, when everything was very cookie cutter and, hey, this works and the numbers work. But now you got to kind of step outside of that box and be like, all right, how can I make this work?
Yeah. So rough numbers, they're aiming for, I believe, a 10% cash on cash.
Wow.
Yeah.
Impressive.
So
even with a DSCR loan, huh?
Yep.
Do you know the terms on that?
I don't actually.
Okay.
I'm very
I haven't
curious.
seen one recently.
Yeah. Oh,
like a closed DSCR loan. I know they're.
We had one in Pueblo. Yeah. So people are starting to do that now. It's
Good.
really interesting. So I don't have the details, I mean, they have kind of a long way to go to get this up and running. So I definitely want to do a deal analysis with actual rehab numbers and once they get tenants and everything and kind of close the loop on that. But it's looking very positive.
And they're estimating about a 10% cash on cash return once it's updated and stabilized.
Yeah.
That's pretty impressive.
Yeah.
It's really impressive. That's higher than I thought.
It's not something we see a whole lot these days.
Mm-hmm.
Great.
Yep. They were pumped about that. So that's one that I have literally zero involvement other than kind of sanity checks with Leah on is she has a client that is a general contractor and they're working on a scrape and build possibility down there. So $1 million views, but a very not $1 million home on it that, they're just going to take that home off. And his plan is actually to build a luxury fourplex on it because it's zoned appropriately. I mean, the location is fantastic. She and I were kind of throwing around rough numbers, and if, we're kind of thinking like 1.4-ish for a sales price on that. So I don't know if he's going to keep it or what the plan is for that. I think he's going to try to sell it once it's done. There's a long way to go on that. I have no idea what the build numbers are because, that's his forte. So I assume he's correct on that.
That'll be a really cool one.
Yeah.
Again, that'll take a couple of years to progress, but as it goes, because you don't see a lot of like infill or scrapes down there. At least I haven't.
There are a few in certain pockets of town, like very specific west side or downtown are really the only areas that I see. But we have, like as a group, have not worked with anybody with that strategy. So I'm kind of pumped from an outsider to learn a lot from their experience on that because I know nothing about it on that end. And then just
I've done a few deals up here in Denver, so if you need any help or have any questions, let me know.
Cool. Yeah, and then the last kind of bit of just personal rental. I had a turnover. The tenants were there for like 4 years, and I raised the rent $300 on this property.
Nice.
So
single family, just 3-bed, 1-bath, 1-car garage. What was your turn cost?
That was kind of a lot, but I'm gonna make up everything in 1 year based on the additional rent alone. So it was about $3,600, $4,000, I think, for the turn cost. So since I raised the rent $300, that's kind of how I'm seeing
justifying it.
Yeah.
Plus, if they were in there for 4 years and they were paying rent and zero vacancy,
and
you still came out pretty well.
Oh
on
yeah,
that.
and we have this house paid off. So in terms of like pure cash flow or whatever, we'll get it paid back in a few months.
Yeah.
So
Congratulations.
That's awesome.
Yeah,
That's
thanks.
awesome to hear.
But that's just normal for our turnovers down here, so very interesting.
But the segue into that, we kind of like bounce around, and I know Steve Medina up north, you were just talking with the property manager up there, and sounds like that property manager seeing and other PMs are seeing some interesting trends, which I think kind of go along with what Jenny was saying there. So what was your kind of the trend you were seeing in rent growth?
Well, we sat down and talked with them, and they're seeing the single families are still really flying. And so they're up 6-8%. We had a turn last month and we were up 12% over what it was before. So it was
this is one of your rentals.
Mm-hmm, mm-hmm. And so they're seeing more rentals go at a better and faster rate. They're still pretty competitive. The multifamilies are a little more sluggish. So they're up, they're up a couple percent. So that's not bad. And they're seeing some things where there's some reluctant landlords. There's some folks that have to move for work or whatever out of town, and they go, I don't think I can get the price I want, so let's just rent it out. So they've been reaching out to them and talking about having it be a rental. There's some other things going on that they have that they're, seeing out there that, some of the regulations are causing some challenges, with the deposits that they can ask for and some of the other COVID things that they have to do and that. And so they're trying to manage through those because they're not well articulated to them. So they're still trying to figure out even some of the COVID policies. Parts of them are lingering on. And so they have to kind of navigate, and they're still trying to figure out exactly how to do that. Yeah. So but overall, for single family rentals, it's still pretty bullish up there. So
and I think a lot of that probably has to do with, just the affordability that we're seeing in the purchase market, right? I mean, there's a lot of people that are getting priced out of being able to afford buying something right now. And we kind
Exactly.
of saw that coming with everything that was going on in the market. And now, they're being forced to keep renting again, but they still have a lifestyle and they're trying to keep their single family home, going. So I think
and
that's a big
been
part
like
of it,
the trend I've seen talking to other investors and PMs, like single family rental seems like across the board about seeing the biggest rent jumps and also the fastest placements.
Yeah.
But I just had one of my, I have a fourplex up in Westminster, and one of the tenants just gave notice they wanted to break their lease early. So they started marketing the property, and I think not even the first week, in the partial week of marketing. So this is a multifamily, updated a couple of years ago. We're pushing rents to like $1,650 and some build back for a 2-bed, 1.5 bath. So it's,
Wow.
it's
That's pretty good.
upper end up there. But the first week, we already had 8 inquiries, or whatever. Yeah, 8 inquiries. And the PM's like, yeah, we'll keep the rent at the same and bump it up a little bit as well.
Yeah.
So, like, I was happy to see that because I think
just shows there's activity in
well,
the
there's
rental
rent
market,
demand
right?
all over
Yep.
the place.
Yeah.
Um,
I think it's like
sure.
Preston said, is that people are getting kind of priced out of that ability to buy because they may not have the down or something like that.
Yeah.
So, but there are some, folks that are having, depend upon their employment history and that are doing double deposits and that. So they, that's where I like that the landlords have some protection too. So that's why I like our property manager, because they do a good job of kind of making sure that they meet a certain standard. And I know that the debt to income and some of that is changing a little bit, right, Newt?
Yeah.
And but if we can make sure that we're doing our fair share and they're doing their fair share, then it works out pretty well.
Yeah. For this one in particular, I got it filled in 4 days.
It's awesome.
So I marketed it the day before the other people moved out. I had all my contractors lined up and basically told all the prospectives, like, this is what we're doing. That's why the house is like a disaster right now. But, by the time I handed over keys, it looked great.
Are you managing them yourself?
Yes.
Okay,
with turnaround times like that, can
That's
you
pretty
manage my
That's 'cause
property?
I was
Jenny-
pretty
that's 'cause
beat
Jenny
after
likes to
that.
bang her head against the wall.
Yeah, I was
So-
pretty beat after that.
Yeah, I mean, that's impressive.
Have you thought about Northern Colorado?
Yeah, no, I do not offer my services to anyone but myself. But so just kind of thinking, it's interesting what you said, Preston, that I think in this case, if they were to buy it at what it's worth right now, they'd be paying more in a mortgage than what they're paying in rent.
Mhm.
Plus, I fix everything, so you can't beat that.
Sure.
Yeah.
And I think, and I've had conversations with clients and people on this side of it as well, is that a lot of people are still waiting on this interest rate thing to figure itself out, which I personally don't think that's going to change anytime this year. And there's a lot of people that are like, well, I'm just going to rent for another year. And I'm going to wait and see what happens. And I'm going to sit on the sidelines. And they're like, cool. Like Jenny said, I can go rent a house, a single family house, for cheaper than what a mortgage is going to cost me right now, even though there's a lot of other benefits, as we know, to buying and owning real estate and investing in it. But, I think there's a segment of the population that's definitely doing that for sure.
I think, there's a good chunk.
Yep.
So, Preston, going up to you. Give us some updates on the Denver trends, and we've got a couple deals to talk about.
Yeah, for sure. I think, obviously we don't want to get too far in the weeds with a bunch of the data here, and we can post all that in the show notes, but active listings are down year over year about 15%, 14%, which I think we're kind of starting again. We've talked about it before. We're seeing that seasonality back in the market that we have, and going back to, people not wanting to sell and staying put for a little while. I think that's adding to that as well. I think one of the big things for me that, I want to reiterate is that, year over year, we're still up, quote unquote, 1% in, average sales price in Denver. So no, we're not falling off a cliff. Things are not going crazy. I have a feeling by the end of the year, we're probably going to be somewhere around that same number, pretty flat, plus or minus 1% or 2%, which, at the end of the day is what it's going to be. But there's definitely not going to be this huge, price drop that everyone is seeing. And I think, mortgage rates are going to stay where they're at for a little while. And it's just going to kind of be one of those hang tight markets.
It's a new normal for a while.
Exactly.
People kind of got through that process where they were going, that dip where the first shock of interest rates that happened last summer. Then they kind of got through that and said, okay, the dust is settling. I can kind of see what I can see. It's going to be this way for a while. And so now they're either going to make a decision or they're not. And so
and on the flip side of that, I also think that's why it makes it a great time to buy real estate and ride the wave, because we know there's going to be a little bit of a correction at some point with interest rates and or inventory, or probably both at some point. And that's when you're really going to be able to take advantage of what's going on in the market. So
Yeah,
that's the big takeaway for me right now is, don't sit on the sidelines.
Yeah, and I think anyone holding their breath waiting for a big price drop in single family residential, like it's not going to happen. Like we're seeing that like, commercial multifamily and commercial properties, like, those loans are floating now or they're coming due. And I mean, I've seen some properties. I mean, people are buying them at 2019 prices now. It's a 15-20% drop up and down the front range. Like that's where the pain is right now.
Big time.
In the residential, it's just people can just sit it out because they got 30-year fixed rates so low.
Well, it's almost like, if you kind of think about it, it's like, remember when you were a kid and you'd grab the hose and you'd squeeze the hose close and not much water come out the end? Well, that's what they're doing with interest rates right now. But as soon as that lets go, it's going to come blasting out, and then everybody's going to try and jump back in. And so prices are going to go up and everybody's going to be in that feeding frenzy. So you're going to see appreciation happen then, but you're looking too short
that's
term.
The other
right
part
now.
of the market right now is that even though you don't hear about the quote unquote feeding frenzy that we're seeing out there with boots on the ground kind of agent stuff, I mean, properties that are priced right, and we've talked about this before, they're priced right.
Yep.
They're in locations where people want to be. They're in good shape. They just have those qualities. We're still seeing multiple offers. We're still seeing bidding scenarios. Like there's still a lot of activity happening in the market. It's just a little bit more subdued than what we're used to, but I think that it's going to change a lot.
When some of the veterans are out there, we were showing some houses on Thursday afternoon that we were in line to be able to get in there with other people that were going to, flip or, and so then you get an email that says, you know what, they're going to be taking all these bids and, closing. And so there's still a lot of activity out there on the right properties that have to go now. And so, it's just whether or not somebody feels like they can get past the anxiety.
You got to jump off the cliff, right?
Watching the headlines and get past it, because right now they're held back by fear. And so, until they can kind of manage that fear, which most people have now, right? Yeah. They've gotten through it and like, oh, we're not all going to die. It's going to be okay. We're going to move through it. And now they're getting creative, like some of the things that you were talking about. So I think those are going to be really powerful for those people that kind of look through the murkiness,
look through the fog,
of the media,
right? Yeah.
And say, okay.
Well, I'm selling one of my rentals. I think end of this week hits the market. It should.
Yep.
And so
I know we're recording this in August, about July, but Chris has definitely got an awesome property with a detached ADU that is going to be coming on the market here. So if you guys have any questions, reach out to Chris or myself.
Yeah, but I'm saying the same thing. Like we'll list it. I think we're listed, at that right price point, and also like spend a good chunk of money to remodel it, because people do want a remodeled property. They don't want to buy a property and then put $30,000 remodeling it. So doing that to fix up, I'll share with the numbers, and we'll talk about the, how much interest we have on there, because we're definitely pricing it, hopefully a good spot.
Yep.
A little bit below fair market value to drive eyeballs, drive walkthroughs, and drive offers. So
yep, for sure.
And then there's one more deal I wanted you to talk about, Preston, before we move up 25. You, I think, just closed on this week with a client who bought a rental that'll turn into a primary in Wash Park, and we just don't talk about many high-end luxury rentals anymore. We've not talked about in a while, especially at a 7-8% rate.
Yeah, for sure. And this was actually a really unique and fun deal to work with a client who was selling a property out of state, doing a 1031 exchange into an investment property here in Denver, in Wash Park. It's pretty cool. It's 2 bedrooms, up, 1 bathroom, and then it's got a separate entrance with a separate basement and bathroom downstairs. So it's pretty unique situation. It's definitely going to be a good rental. I mean, there's a lot of opportunity in that market and in that location to either do long-term rental, medium, short-term, split it up, either way. At the end of the day, they were, moving, quite a bit of equity out of a property out of state. And so this just ended up being a great opportunity for them. And, I think one day it may end up becoming a primary residence, but it still, shows that there's properties here in town and, nice parts of town that, will work for rental properties. So
you said it should be around about a break-even cash flow, right?
Yeah, it's going to be around a break-even cash flow, which again, as we know right now, is pretty good when we can find it.
Especially in a place like Wash
Well,
Park. That's why I was so curious. I was like, how native will that be? And I was really, really surprised.
Well, and I think a lot of that obviously comes with, the amount of cash they're putting down from a 1031. But at the end of the day, that's the other thing we're seeing in this market, right? Is we're having to put a little bit more, money on the table to help make the numbers work, but you can still make stuff work. And so, this place will rent for, long-term minimum $3,500 to $4,000. And then if they end up doing some shorter, medium-term rental to help offset that and kind of split things up, I think it's going to be great. So I'm excited to see how everything, kind of plays out and where everything ends up. Obviously, like we always talked about, we don't have that crystal ball, but we look at as much data and as many numbers as we can. And at the end of the day, buyer was comfortable with it. We were able to make the numbers work, got the deal done, and it's going to be a great property.
Did they sell the out-of-state property, or did they just tap into the equity there?
Nope, they sold the out-of-state property.
Okay.
Yep. So, again, there's always a lot of things in play between working with the listing agent on the other side to kind of figure out coordination and timing and, hey, what's going on? And they were able to get an all-cash deal that closed in 10 days, which really helped us on our side, be able to get an actual contingent offer accepted in this market, and work with the sellers to get everything done. And, the sellers were trying to buy another place as well. So it was, definitely not the easiest of transactions and was a little bit stressful at times, but we were able to get it done and everybody walked away happy.
Yeah, that's awesome.
Yep.
And also kind of comes down to like, as we talk about buying deals with people are doing, it's like, it's so like, there's looking at the deals, but there's context for what the investor is up to as well. Hey, this investor is moving out of a very high equity, low cap rate California property, different mindset, different goals, different phase of life, different markets moving into like, and then we talk about the unique partnership that Jenny had with some, one's a younger, newer, hungry investor. And it's all about like the different types of deals they can find, but a lot of it's based on, hey, what can we see? But also like, I like having the context on there as well.
For sure.
Because straight numbers tell half the story.
Right.
There's always a lot more happening behind the scenes than what's just on the spreadsheet. Right?
Yeah. And so that's always one thing I want people keep in mind is like, just don't look at numbers, but also get the story, get the context behind it. Hey, why is this person buying? Why is this person selling? Why does it make sense for him or her? And then understand, learn from that and apply it to your situation.
Yep, absolutely.
Yeah, don't stop at the headline. Keep going.
Yes.
Yeah. Look at the fine print sometimes.
Yeah. All right. So, Newt Wyler, Steve Medina, you guys this is your third or fourth podcast with us. You are the newer members of Envision Advisors with representing Northern Colorado now. So thank you guys, and also being a part of the podcast. So what are the trends like up there, guys?
It's somewhat similar. We've got some of the markets and cities up there are actually up. Most of that downturn that was happening from summer of last year till kind of March, April of this year has kind of turned itself around. There's still a couple markets. I think, Greeley and Johnstown haven't fully come out of it. But
that's the thing I think it's very unique about Northern Colorado is you've got a lot of quote unquote submarkets, right? Like down here in the metro area, we kind of have the metro area. And we've got some neighborhoods and things like that, but it's definitely a lot more spread out and a lot more diverse up north. And I think that plays a lot into kind of, the numbers that you see up there.
Yeah. So you have all the cities that are in kind of the Larimer side. And so they tend to all be up a couple percentage points. And then we've got Weld County that some of those are up a lot, but you've got all the way down to Longmont. And rents seem to be doing well. We've looked at those. Northern Colorado is doing pretty well. I mean, Boulder's kind of that one it's its own little entity.
It's going to be its own little outlier,
it's
right?
It's
you kind of just put out the side though. And,
they like it that way.
But when you look at Colorado as a whole is like 21% higher than like most of our fellow states next to us. You've got Utah, you've got New Mexico, you've got Kansas. We're a different animal. And then up in Northern Colorado, we're still seeing that. So we've got somewhat the same number of units on the inventory up in Northern Colorado, but they're going just a little bit slower. So there's a little more opportunity to be able to negotiate and find some deals. I just literally did a poll this morning to see that there's like 70 2 to 4 unit multifamilies between Boulder Boulder, and Larimer and Weld. And, there's, still opportunity out there, but you're going from this extreme with Boulder. They've got 15 out there that their average price is $1.6 million. And then you go down to Greeley where you've got 16, coincidentally enough, and it's $569,000. So, depending upon those, that's where people can look.
Big spread between purchase price.
Yeah.
Yes.
And those could be a duplex or a triplex. There's not many triplex, but some of those. But we looked at a triplex in Boulder and Gun Barrel on Thursday, and the numbers are close to working. So, even some of these where Newt and I looked at one last Wednesday, there was a fourplex that. Pulling some of the numbers, the rents look like they were a couple $100 per unit under. So even at an 8% investor rate, it still would be somewhat cash flow positive going in. So the investors that are seeing those and able to kind of see, exactly like you said earlier, what we've got, what can we do with it, and then find a way to take up value or find a better deal on it, because you can either buy equity or you can buy cash flow. And right now it's kind of buying equity.
Yeah.
So. And then Newt's got some good stuff going too. So,
Well, mine's mostly just boots on the ground stuff. Steve's the smart one.
no,
No, well, we're closing on a duplex this Friday, which, it's a house hack where the clients are actually going to live on one side of that. And that's going to be in Fort Collins. So that's kind of nice that we were actually able to find that. And
Yeah, that seems pretty unique to be able to find a house hack in Fort Collins.
well, yeah. And Fort Collins typically has a higher price point up there as far as our, pocketed.
Yeah, what is
amenities.
the duplex purchase price approximately?
Actually, this one is where we were able to get it around 530. So
That is less expensive than I
Yeah, I
thought
was
it would be.
definitely
well, and
thinking
it's actually
650.
outside of the city limits, so that's
Okay.
That's hopeful because anything right down in Old Town, you're looking closer to 8.
Okay,
That's kind of
yeah.
what I was thinking. Yeah.
So a lot lower price point, but obviously the numbers work for the client, right?
Yeah, they work for the client, and it had some deferred maintenance and fell out of contract a couple times before us, so it helped that we had a client that was willing to take on some of that stuff.
and I think what you
Just
also
finding
did
those
that
deals.
people sometimes forget is doing a backup offer. That's right.
That's right.
They went in, something happened, and there was a offer that was accepted ahead of them. But Newt went in and said, "Let's make sure that we have the backup offer." When it fell out, guess who's in number one position without having to do anything
Mhm.
else? And so, I think that's part of that.
Can't even count the amount of deals that I've got out of
Exactly.
backup offers. I mean,
Because what does Lon say? It's like 25% of the deals.
I mean, it's closer to 30, I
high.
think, now from what we've seen after.
Because people's situations change and
Yep.
all of a sudden they're not. But being in backup position is a great space, and I think that's one of the key strategies that helped you on this one. So that's hats off to you.
Oh, I agree. Thank you. And yeah, we've got a lot of owner occupancy stuff going on up there too. But yeah, it's for whatever reason, we're starting to see, in April, May, and June, it seemed a little bit slower for me personally as far as the agent side of things. But after right around July, the floodgates are starting to open. So the people that were prepared are starting to get out there and take things on. Maybe they've just gotten used to the rates and they can make the numbers work in their heads. Not sure exactly what's going on.
I think it's somewhat the
Anecdotally.
psychology of it.
Yeah.
After you've been in it for a while, you go, "Oh, we're not going to perish," and because it was all doom and gloom last fall, interest rates up high, and then you go, "Okay, well, I'm still driving to work. I'm still doing my stuff. I'm still doing all my things.
Life is still going to happen.
Life
Yeah.
is still going to go on.
Yeah.
So, why am I letting this get in my way?" And so that's what.
And
some
here's all
people
the
have.
other advantages to getting off the sidelines,
Yep.
So, yep, I agree 100%.
And so there's people out there that are doing it. We may be having a little bit lower inventory, but people still have to get this done. They have changes in their family, and they're starting to see that this too shall pass. But what it will be on the other side is potentially lower interest rates and a faster appreciation because it's that hose that's going to let go, and then things are going to kind of get back, and then they'll find some medium point that's like equilibrium, if there's any such thing anymore.
So well said. And hey, as we wrap up here, I know a couple weeks ago we did a Northern Colorado investing webinar. I think the following week from now we're doing one in Southern Colorado with Jenny. A couple weeks after that we're doing one in Denver. So we're doing some new webinars, and those being posted to the website. And I think we're going to do the replays on the podcast as well that are a lot more just market specific, a little bit more dive into data, dive into a couple of deal analyses and just the trends and opportunities that we see in those marketplaces. And they're all slightly different. I mean, real estate really is all about, that local. And Pueblo is different than the Springs, which is different than Denver, which is different than, all the submarkets up north. So if you guys are wanting to dive into the deeper opportunities and markets on the Front Range, check out those webinars. I will put the links in the show notes or just email one of us. We'll get you hooked up on there as well. But as you can see, we're seeing opportunities out there. Things are definitely different from they were a year ago. But things still make a lot of sense. If you have any questions, we'd love to sit down with you, educate you, and see if there's a good deal out there that fits your criteria. So as we wrap up here, ladies and gentlemen, any closing thoughts, stats, deals you want to throw out here?
Well, Preston, do you want to talk about the taxes?
Yeah, so that was one thing I was going to kind of bring up, and thanks for reminding me, Newt. I think one thing that, a lot of people are getting a little bit shocked by right now is taxes, and we've talked about that before, but there's been anywhere between a 20 and 40% increase in property taxes here in the metro area and, basically all across Colorado, and I think that's going to be something that is going to come into consideration for a lot of people as they're starting to analyze deals and look at current properties. Mortgages are going to go up, all those escrows are going to change, all that kind of stuff. So I think that that's definitely something that is going to be a trickle down effect and be a big thing for a lot of people.
Insurance too.
Yep.
My premiums have skyrocketed. I've had some providers cut me off because I apparently have too many properties. Yes,
Jenny,
that
you're
was
just
the
a
first.
giant risk, okay?
I guess so, yeah. So, that was a new one. I think they're just kind of finding any reason to
well,
be
and
able
let's
to
face
cancel
it, we've
people.
had kind of a crazy summer here with hail,
Yeah.
and right now Colorado's currently ranked number 2.
Oh, hail, and
for
how many basements have flooded?
Yep.
Oh, yeah. We've had
Year.
And
two. Yeah.
again, that's going to be another trickle down effect once all the insurance companies get through dealing with all this stuff and paying all that. I mean, it's definitely going to
Yeah.
have an effect on a lot of people. So between
Yeah.
taxes and insurance, I think that's something that people really need to make sure they consider as they're analyzing and looking at properties.
Absolutely.
Yeah, I did not have great luck with my tax protest on some of the properties.
I did.
You did
I
great.
got like 9 out of 12 that I protested.
Did ya?
Yeah.
I got like 1. The rest I was like, oh man, all
Darn
right.
it.
Well, I thought I'd get a little more than that. But speaking of like insurance, I've talked to some people earlier this week or last week at the Your Castle had their big meeting, and some mountain and foothill people, and we're complaining about insurance down here. Up there, oh my gosh, you're like doubling and tripling.
Yeah.
And they
Wow.
were saying because all the wildfire risks,
And
like
we're
some of
also
these-
ranked number 3 for wildfires in the country. So
Yeah.
between hail and wildfires, like it's not good.
So if you're up in the mountains, like yes, taxes, insurance, but up there, I've heard a lot of more horror stories up there coming down, especially in like some of they say like the smaller condo complexes
Mhm.
where they just don't have hundreds of units to spread out the risk increase. But one complex, I forget how big it was, decent sized complex near Keystone. The broker was telling me it's going to be $2,500 assessment per unit just for this year's increase in insurance premium.
Wow.
Will it be next
Wow.
year? Probably 25 and plus. So, I mean, yeah, be aware of that. But if you're out in the foothills, be doubly aware of it, I guess.
Yeah.
Do you know of any rumblings as to what the effect might be? Do you think people will just stay and grin and bear it and pay the special assessment? Or do you
I
think people
haven't
are gonna
heard.
sell?
Yeah, I don't know. It was
Okay.
just over a cup of coffee
Yeah.
that I was kind of like, I love like hearing other people like, hey, they know that market so well. Like I just like listening to them. It was all just predictions. Like, well, how many people are going to sell? How many people eat it? What's going to cost? And
Yeah.
they're like, we don't know, but it's causing some, just causing some pain up
Big
there.
surprise for a lot of
Yeah,
people.
Yeah.
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 Cool. Awesome. Well, I think the monthly market updates were some of the most fun moments during the month for me. So Newt, Preston, Jenny, Steve, thank you guys. Listeners and viewers out there, thank you. If there's specifics you want to know more about, tell us. We'll try it next month. But most importantly, we all live locally. We all invest locally. We all do deals locally. If you have any questions for Southern Colorado, Denver, Northern Colorado, reach out to us. We are here to give you the stats, the information, and help you make the best move for your portfolio. So thank you, team.
Thanks, Chris.
Thank
Thanks,
you.
Chris.
Thank you.